Hello and welcome to Ticker Tapes. It's Wednesday, which means it's time for a look at the crypto space. Bitcoin has fallen back below $30,000 and is now some 7.31% below its recent high of $31,961, which it posted on June 1st. The sell-off seems to have been led by the liquidation of crypto derivatives positions, with traders reducing their overall crypto exposure by $210 million. Analysis by crypto statistics site CoinGlass.com found that more than 72,000 traders had sold or had been closed out of their derivative positions in the previous 24 hours. Contracts such as futures, options, and perpetual swaps allow traders to leverage their exposure. However, the gearing in these instruments can rapidly magnify losses if the price moves against the trader's position. The highest percentage of liquidations were made on Binance. The exchange has recently found itself implicated in an SEC investigation, which will look at whether or not Binance Holdings broke U.S. securities regulations when it launched the BNB ICO, or initial coin offering, in July 2017. More specifically, the SEC will look at whether U.S. citizens were offered an opportunity to participate in the new issue. This is the latest of several ongoing federal investigations into the Chinese exchange, and it comes just 1 month after allegations were made by the Reuters news agency that Binance had processed more than $2 billion of funds that were derived from crypto hacks, Ponzi schemes, and the proceeds of crime. U.S. lawmakers are also said to be drafting legislation that could, in theory, eliminate anonymity in the world of DeFi. A leaked copy of the draft 600-page bill, which would force those involved in DeFi crypto projects such as DAOs and decentralized exchanges to register their interests, circulated on Twitter early on Tuesday morning. U.S. regulators seem keen to protect end users and therefore want to make the creators and organizers of DeFi projects known and accountable to the authorities, something which runs completely counter to the freewheeling ethos of the DeFi community. The draft bill also proposes that DeFi exchanges and protocols become more compliant by issuing terms of service and client agreements and preventing the marketplaces from accessing client funds in the event of bankruptcy. Crypto lending business BlockFi has raised money for itself in a new funding round. However, the latest round values the business well below the $3 billion mark that it achieved when it raised $350 million in March 2021. BlockFi was then thought likely to tap venture capital investors for a further $500 million at a $5 billion valuation in July last year, and there were reports that BlockFi might consider an IPO, neither of which has materialized. Instead, insiders report that the latest funding round will value the business at just $1 billion, a sure sign that investors in crypto-related businesses are driving a much harder bargain before parting with their money in 2022. In February, BlockFi was forced to pay $100 million in penalties to the SEC and state regulators over the marketing of its high-yield accounts to U.S. citizens.